Hello, everyone. Let me ask you a question. When you look at a price chart, what do you actually see? Most traders see candles going up and down. They see patterns, they see lines, but they're missing the most important piece of information on the entire chart: volume. Price is just the advertisement. Volume is the actual transaction. It's like judging a restaurant only by its sign outside, without ever checking if there are any customers inside. In this video, I'm going to show you how to read volume correctly, not just what volume is, but what it means, why it matters, and how to use it to see what's really happening behind every move. After this video, every candle on your chart will tell you a story, and volume will be the proof. Not financial advice, just education. Let's get into it. Let's start with the basics. Every chart speaks two languages at the same time. Language number one, price. Price tells you what happened. Did the market go up, down, sideways? That's the headline. The news title. Language number two, volume. Volume tells you how much conviction was behind that move. How many traders participated? How much money actually moved there? That's the evidence, the proof. Think of it like an election. Price is the result, who won. But volume is the number of voters who showed up. If only 10 people voted, does the result really mean anything? But if 10 million people voted, that's a declaration. Same with the market. A big green candle on low volume? Suspicious. A big green candle on high volume? That's conviction. That's real. From now on, every time you look at a chart, don't just ask, where did price go? Also ask, how much money stood behind that move? Now here's the single most important idea in this entire video. To read volume correctly, you only need one mental model, just one: effort versus result. In the market, effort is volume, how much energy, how much money is being used. Result is the candle, how far price actually moved. Think of it like pushing a car up a hill. Your foot on the gas pedal is the effort. How far the car moves is the result. Case number one, you press the gas, the car moves easily, big effort, big result, everything matches. On the chart, that's a big candle with high volume underneath. Lots of buyers. Lots of conviction. The move is real, like a whole stadium standing up to cheer. That's genuine excitement. Case number two, you slam the gas pedal. The engine roars. Fuel is burning. But the car barely moves. There's something blocking the road. On the chart, that's a tiny candle with massive volume underneath. This is called absorption. What's happening? Buyers are pushing hard, but there's an invisible wall. A large seller, smart money, is sitting there quietly absorbing every single buy order. Think of a dam. The water keeps pouring in, but the dam holds everything back. When the water runs out, when buyers exhaust themselves, there's nobody left to push price up, and very often, price drops sharply. Case number three, you barely touch the gas. But the car keeps rolling uphill by itself. There's no resistance. The road is empty. On the chart, that's price moving up on low volume. This is called no supply. It doesn't mean buyers are super strong. It means sellers are absent. Nobody is selling. So the market doesn't need much effort to move, like walking on an empty road. No one is blocking your path. Now here's your cheat sheet. The volume matrix. High volume plus big candle, healthy move. High volume plus small candle, absorption. Warning sign, low volume plus price still moving, no supply or no demand. The other side is absent. Memorize these three combinations. They're the foundation of everything that comes next. Now let's apply effort versus result to specific candle patterns. This is volume spread analysis, VSA. 3 patterns every trader should recognize. Pattern 1, stopping volume. Imagine price is crashing, red candle after red candle. Everyone is panicking and selling. Then you see this, a tall red candle. The volume bar underneath is huge, the biggest in weeks. But here's the thing. The candle doesn't close at the very bottom. It has a long wick below, and the close is near the middle. What happened? Someone with deep pockets bought everything the panicking sellers were throwing away. They didn't stop the crash with words. They stopped it with money. High effort, small result. The price didn't go lower despite massive volume. That's absorption at the bottom, a potential reversal zone. Pattern 2, buying climax. Now imagine the opposite. Price has been going up for weeks. News is great, everyone is bullish. Retail traders are jumping in because they don't want to miss out. Then you see a huge green candle. Volume is extreme, the highest on the entire chart. To most traders, this looks like massive strength. But here's the plot twist. This is not strong buying. This is strong selling disguised as buying. Smart money uses that wall of buy orders from retail traders to unload their massive positions. They're selling into the demand quietly without crashing the price. Like a vendor at a night market, the busiest moment? That's when they're clearing out the last of their stock. The moment you FOMO in at the top? That might be exactly when smart money is walking out the door. Pattern 3. No supply test. After an uptrend, price pulls back a little. You're worried. Is this a correction? Then you look at volume. A small red candle, and volume is very low. The market is asking a question. Does anyone want to sell here? And low volume answers, no, not really. That's a no supply test. Sellers are absent. The uptrend is likely to continue. Like testing if the fire is hot. You put your hand near it, it's cool, safe to move forward. 3 patterns, 1 mental model, effort versus result. That's enough to read 80% of what volume is telling you on any chart. Now before we go further, let me clear up the most common mistake in volume reading. And if you've been making this mistake, don't worry. Almost everyone does. The myth? Green volume bar means buying. Red volume bar means selling. That is not how it works. Here's the truth. Every single trade requires a buyer and a seller, always, without exception. If you bought 100 shares, someone else sold you those 100 shares. Volume counts the number of transactions, not which side is winning. The color of the volume bar? It simply follows the color of the candle. If the candle closed higher than it opened, green bar. If it closed lower, red bar. That's it. It has nothing to do with who is buying or who is selling. Think of a busy fish market at 5 in the morning. The market is packed, high volume. But there are buyers and sellers everywhere. You can't say today is all buying just because the market is busy. Busy means activity. To know who is winning, you look at where the candle closes. So here's the rule. Don't look at the color of the volume bar. Look at the size of the volume bar combined with where the candle closes. Size plus close position. That's where the real story is. Now let's talk about one of the most powerful warning signals in volume analysis. Volume divergence. When price and volume agree with each other, the trend is healthy. Price going up, volume going up, strong. Price going down, volume going down. The selling is weakening, but when price and volume disagree, that's your early warning system. Here's the most important one. Imagine price is making new highs. The chart looks great. Everyone is celebrating. But if you look at the volume bars, they're getting smaller. Each new high has less volume than the previous one. Think of a rocket. At launch, the fuel is full. The rocket blasts off with enormous power, but as the fuel burns, the thrust weakens. The rocket slows down, and eventually, it falls. That's what declining volume during an uptrend looks like. The move is running out of fuel. Fewer and fewer traders believe in the move. The same works in reverse. If price is falling but volume keeps dropping too, sellers are getting exhausted. Each drop has less and less participation. The selling is drying up. That often signals a bottom is forming. Volume divergence is your free early warning system. The market hasn't crashed yet, but it's getting tired. It's like the applause getting quieter after each speech. The audience is losing interest. The show is almost over. When you see price making new highs but volume making lower highs, pay attention. Something is about to change. Now let's turn everything into a simple process you can use on any chart, any market starting today. I call it the 3-step volume check. Step 1, zoom out. Before you look at individual candles, zoom out to the daily or weekly chart. Ask yourself, is volume overall increasing or decreasing? Are there any unusual volume spikes recently? Think of it like checking the weather before going outside. You want to know the climate before you worry about the rain. Step 2. Zoom in to key levels. Find the important support and resistance levels on your chart. Now watch what happens when price approaches those levels. Apply effort versus result. If price touches resistance and volume spikes, but the candle stays small, that's absorption. The wall is holding. Be careful. If price breaks through resistance with a big candle and high volume, that's a real breakout. Effort matches result. But if price breaks resistance on low volume, be suspicious. A breakout without conviction is often a trap. Step 3. Wait for confirmation. This is where most traders go wrong. They see one signal and immediately jump in. Don't do that. After a breakout, wait for the next candle. Does price pull back to the broken level? If it does, and that pullback happens on low volume, that's a no supply test. The market tested the level and found no sellers. That's your confirmation. Patience for one extra candle can save you from 10 losing trades. Let me show you how this looks in practice. Price is approaching resistance. You zoom out, volume has been steady. Price touches resistance, volume spikes. But the candle is small with a long upper wick. High effort, small result, absorption. The wall is strong. You don't buy, you wait, price drops. You avoided a trap. 3 steps: zoom out, zoom in to key levels, wait for confirmation. That's your volume playbook. Before your next trade, run through this quick checklist. 1. Is volume increasing or decreasing compared to recent bars? 2. Does the effort match the result? Big volume should mean big candles. If not, someone is absorbing. 3. Are there any unusual volume spikes near key levels? 4. Is volume diverging from price? New highs on lower volume is a warning. 5. What does the next candle confirm? Never act on one candle alone. When you ask these 5 questions, you're no longer guessing. You're reading the market. You're seeing the proof behind every move. Because volume is not just another indicator on your chart. Volume is the truth serum of the market. Price can be pushed around. Price can be manipulated. But volume shows you where real money, real commitment is stepping in. If this video helped you finally see what's behind the candles, let me know in the comments. Which pattern are you going to look for first? Stopping volume? Buying climax? Or volume divergence? Drop a comment. I read every single one. I'll see you in the next video. Stay disciplined.